The best case, I think, for gold is if Bitcoin resistance around 100,000 holds and eventually kicks down. That means all risk assets are expensive, signaling lower. That means a major, I think, tilt towards gold and treasury bonds. Every single outlook for next year assumes the stock market's going to go up. Almost all of them. They have to. Just imagine if it drops 10%. That's severe deflation. And the best leading indicator for that might be Bitcoin. Now, for next year, because of what's happened with this paradigm shift in our U.S. government to a crypto-friendly government, is Bitcoin has to go up. I think the inverter is now on Bitcoin.
Is Bitcoin at its peak at $100,000, or is there more upside to go? Or can we see a lot of selling at current levels? What are commodities signaling in terms of economic growth? Recession, economic depression in 2025, or a lot of growth? And inflation just came out today. The CPI numbers came out today. 2.7% headline CPI, slightly higher than last month. So is inflation coming back? This is the first uptick in months. All these questions will be answered today with Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. He'll be giving us his outlook on markets, commodities, Bitcoin, and much more. This episode is brought to you by Novium. Very interesting, cool hover pen. More on that later. Mike, welcome back to the show. Good to see you.
Hello, Dave. It's good to see you, and thanks for having me back.
We're talking about today's CPI report. We're speaking on the 11th of December, 2.7%, so a slight uptick from the previous month. And the core inflation also went up a little bit. So we're moving in the opposite direction of the Fed's 2% target. I know we've been calling for deflation to come in as a deflationary bust if the economy sees some sort of slowdown. This move in the opposite direction, did it surprise you at all? A lot of it came from shelter.
No, it's from shelter, which is silly. I think at some point this owner's equivalent rent will be excluded from CPI, like mortgage rates used to be in the decades ago. It's my takeaway from what I'm just publishing on this is it might be kind of silly to expect inflation to drop a lot when we have the stock market rate related wealth effect the highest in 100 years. And most of us aren't 100 years old. We just never have had this back in normal times. And that is that this massive pump in equities. It's 2 times GDP. And that's a massive wealth effect. So why should consumers stop spending? Should go spend that money. And that should continue for a while. That to me is part of that lose-lose. And also we have a wonderful situation for wealth effect. We have the stock market going up and Fed's easing. Does it get better than that? That's the key question, is how much higher can we go for risk assets?
And that is the crux of my of my interview with you today, is whether or not you've changed your outlook given the fact that, well, first of all, Bitcoin's at 100,000. We'll talk about that. Perhaps that signals animalistic spirits. Today's CPI print, we can talk more about that. Trump winning and his policies. Would all these things steer the economy in a different direction than what we've previously talked about?
I think that's the problem is for 2025, it actually might make it worse initially because everything I hear is about how the regulation is going to be great and lower taxes and, less regulation, business friendly environment. That stuff takes years to kick in and typically takes congressional actions. But tariffs will happen day one, and tariffs are a bit of a pushback, and they're going to be initial, maybe a little spike in inflation, but that's going to be a short-term negative. In addition, some of the potential I wouldn't say, I don't know if they're going to be cuts or they're going to be more like, no, sorry, if you're not showing up in the office, you got to leave, for government spending. There's going to be a lot of these cutbacks that are going to come out day one, I should say year one. And if you're the new administration, you got to the midterms and then you got 4 years and then it's about your legacy. You get it over with right away. And that's what happened the last time. When we had a pretty good 20% correction in 2019, you had some decent corrections in 2018, the equity market. The problem this time is back then it was somewhat cheap at maybe 1.4 times GDP and right around its 100-week moving average. Now we're 25% above the 100-week moving average in S&P 500, which is very rare historically, and we're 2.2 times GDP. That's the most in 100 years. So equities are very expensive, and the best measure in history will go down in history as the best measure of the Trump rate is cryptos, and Bitcoin's is one of them. But Bitcoin at 100 grand, I think, as you mentioned, I think has reached a pretty good milestone. And we have a crypto president. There's no zealot like a convert. He converted from completely agnostic to crypto friendly, and it feels like it's a bit of a Faustian bargain at the moment.
Yeah.
Question how far it goes. And I like to end with, what is the significance of a $60 billion Dogecoin, the same, actually higher market cap than Bank of America Mellon, which has what, 15 billion of revenues. It's just a sign of silly speculative excesses. Picking a top is difficult, but we're going to look back at stuff like this and say, yeah, that was silly.
I have you on record saying Bitcoin will reach 100K by 2025. This was a couple of years ago when I first started interviewing you during the bull rally, rather. So yeah, it was probably 2 years ago. And you had told me that for Bitcoin to reach $100,000, it just needs to do nothing. Basically, if you look at the historical price appreciation cycles, the next move upward from current prices, $100,000 would not be improbable. Do you still hold that view?
Oh, I do. And what happened was that actually happened in the Ethereum, the equivalent Ethereum, rallied about, I think it was, 10x or so was what I was expecting in Bitcoin. Of course, we had the miners kicked out of China. So it did not happen. Got high, was around 70. And I fully expect Bitcoin's going to return to that trajectory, but I don't know if the bottom's in yet. The key thing, about Bitcoin is it has something I've never seen before in almost any asset, certainly commodity, is definable diminishing supply and low in early days of adoption and becoming global digital collateral. I fully expect it's going to go that way. Now, there's bumps in the road, there's issues with regulation, but right now it's showing what I think is going to happen is it's going to continue outperforming most risk assets. The key point is we're still pulling away liquidity, and it's still one of the most riskiest assets. I think it's eventually going to trade more like gold and treasury bonds, which it has been, but all assets have bounced this year. It's when we get that rollover in a recession in equities, I have to see how Bitcoin can outperform. The key fact is I think it's going to continue to outperform most other cryptos, particularly the Bloomberg Galaxy Crypto Index. And there's so much speculation in that space that needs to be purged. And that's indicative of what you saw in inflation.
So you actually kind of really nailed that call because Bitcoin reached 100K just before 2025. And end of the year is close enough. Timing is pretty spot on. And back then, I remember your rationale was that Bitcoin, like nothing needs to happen for Bitcoin to hit this target, right? You remember what you said there? It was just a cycle thing. It was just Bitcoin was naturally going to hit this target. It happened. Can you explain why it eventually happened and basically what's next?
So first of all, David, I want to thank you for reminding me for one of the ones I got right. And I do want you to remind me, sometimes good to remind me for when I get them wrong. Part of the reason it got to 100 grand is because I felt the horse for a little while. Once Trump got elected, that flipped the world. But the bottom line now is things have changed to some extent. Back then, that's one thing as a strategist and as a commodity person, I'm inherently contrarian, which Trump is too, according to McMaster's book, which is At War with Ourselves. He's inherently contrarian. And back then, everybody hated it. I mean, it was like even at Bloomberg, it was no one, senior management, and it didn't really cover it. And now it's as loved as I've ever seen it, particularly in ETFs. And the key thing I think to remember about it is we're going to look back at this year and say, is it going to get better? Starting with first the launch of US ETFs. I mean, that battle was epic historical. I'm looking forward to writing books about this stuff. Got the ETFs launched, and they're having, at the same time, we've had, record-setting stock market, Bitcoin reaching 100,000, and the number one most significant factor of all is our sitting and new re-elected president is switched from a complete antagonist to someone who really likes crypto. That's a major shift. So is it going to get better? What do we have to look forward to? And that's why I point out now you need flows. And that's why I dug down to ETF flows. So if you look at ETFs now, total ETFs tracking Bitcoin is, I'd say 125 billion. You compare that to gold ETFs, it's about 220 billion, depending on the day. We're almost there. So I was going to do some analysis, say, once we get to the same amount as maybe what tracks gold, what that would mean for the price of Bitcoin. Then I realized Bitcoin trades 3 times the volatility of gold. So on an ETF basis, we're already at risk parity with the amount that tracks gold. And the key thing that's always been a resistance level for any type of ETFs that track non-income producing assets like commodities and gold is every RA on the planet will say, well, where's the earnings? And that's typically what I think we're going to run into with ETF flows. So all the Bitcoin people are counting on those flows to continue. And I'm sensing that, well, welcome to the commodity world and welcome to markets that don't have income, and they're pretty significant resistance, and they're pretty significantly showing animal spirits that I'm actually becoming much, much less bullish Bitcoin. And the key thing I could point about is, look at this, David. Let's look at the iterations of of next year. We'll say we're at this time next year. And it's not hypothetical, but on a first standard deviation move, Bitcoin should be up 40% if it's continuing. That's a lot. Or it could be down 40%. But the crypto bros don't even consider the fact that it could trade around 60. That's, it's a 40% standard deviation. That's an annual basis. Meaning it could get to, 1,400. But I think the key risk is, what if it goes down? And I think that's the major risk for everything, because we have the most elevated stock market on many measures in centuries. Most people say like 97 percentile, most measures. And there's the best leading indicator on the planet is Bitcoin. So I'm worried about the risk to the downside. And that's why one thing I keep watching closely is that Bitcoin to gold ratio. It's just bumping up against that peak from 2021. It's holding there. Stock market's taken up and it's still not getting above there. So I think here's my base case is the best case I think for gold is if Bitcoin resistance around 100,000 holds and eventually kicks down. That means all risk assets are expensive, signaling lower. That means a major I think tilt towards gold and treasury bonds, which is something I'm still kind of waiting for. Gold's been doing great, but the treasury bond catalyst hasn't kicked in yet. And most people can say, yeah, McGlone, you've been wrong. I have to admit that. But to me, this is what's happening. I like to end with this. The key thing I think we have to watch is what's happening globally. Pretty significant deflationary forces. I just like to point out that Chinese 10-year note at 1.84% as we're recording on the 11th is a sign of severe deflationary forces in the world's second largest economy.
Before we move forward with the video, let me show you the coolest pen I've ever seen, a hover pen that literally levitates. Today's sponsor, Novium, is offering this pen at an exclusive 10% off just in time for Christmas. If you're looking for a standout gift, not just a regular pen you write with every day, the Hover Pen Interstellar defies gravity, levitating on a stand using magnets to make an elegant statement for any office or home environment. This is definitely a gift or just something that you will use every day that will be remembered forever. The Hover Pen is refillable, crafted from aircraft-grade aluminum, and designed with ergonomics in mind for a comfortable writing experience. It's even been featured and recognized by Time magazine as one of the best inventions of the year. Novium also offers the Hover Pen Future, a fountain and rollerball option for those who prefer versatility. Use the code DavidLin at checkout or click the link in the description down below or scan the QR code here to get your holiday gift that will be remembered forever, the Hover Pen. Okay, so lots to touch on there. Let's just on the deflationary forces. It seems like the rest of the world, in many parts of the world, they're seeing deflationary forces, recession, slowdown, et cetera, et cetera. Not so much in the U.S. Why is the U.S. the leader of the pack?
So where you can put your money, number one, we can't underestimate the earnings and the upside. The wealth creating machine of U.S. stock market is phenomenal. There's no place in the world that's even close. I mean, look at China, look at Europe. There's not even close. Maybe little pockets. So the money's flowing in, and you can see that in the dollar. And it's just a question of how much longer it lasts. But it's at the same time on the back of the greatest deficit spending, 7% outside of war and recession ever. I mean, so, okay, we're spending a lot of money. So this is what I just published recently. The market gold is liking this increasing dependencies on a global stable market. We are completely dependent, and we have to increase our deficit spending. Maybe the new administration can eliminate that. We're getting Fed rate cuts, and we have to every day certain commodities depend on more cuts from OPEC. OPEC has to restrict supply from the market to keep oil prices at least stable. And the most significant one of all is we're completely dependent on more stimulus from China. So I look at it as a commodity trader. Every day that goes by, you're looking for, as soon as they give me some stimulus, the market bounces and they're looking to sell, and they're waiting for it. And it's just dependent now. It's just expected. It's a prerequisite. So to me, this is a sign of an economy that you'd expect many years after biggest pump in liquidity ever. It's taking longer than expected. And it puts down the inordinate burden on U.S. stock market to stay elevated. So this is what I'm sensing. We're at the point now, every single outlook for next year assumes the stock market's going to go up. Almost all of them. They have to. Just imagine if it drops 10%. That's severe deflation on the back of what's happening in commodities. I mean, gold up, crude oil down. And the best leading indicator for that might be Bitcoin. So that's why I'm looking at it. To me, the inordinate burden I pointed out this year for commodities to go up was the stock market had to go up. It did go up 33% or about a third. And commodities, most of them, most notably crude oil, still went down. Now for next year, because of what's happened with this paradigm shift in our U.S. government to a crypto-friendly government, is Bitcoin has to go up. I think the inordinate burden is now on Bitcoin to go up.
Bitcoin is a leading indicator for commodities. Is that what you said?
No, for the stock market, for all risk
The
assets.
stock, yeah, it's a
For all risk assets. So I put it more closely related from commodities, more closely for, copper
I
needs
understand.
Bitcoin to go up and gold needs Bitcoin to go down because I want to
Yeah.
point out we can tilt to that in a little bit, but we've had 4 years in a row of outflows of ETFs investors from gold. And of course, one of the biggest ETF launches ever this year in Bitcoin.
Okay. So gold, yes. Gold and Bitcoin. Actually, Jerome Powell just recently said gold and Bitcoin are competitors. We can touch on that.
Or in the Federal Reserve itself, in terms of the system. What do you think of that idea?
I don't think that's how people think about it. I mean, it's so, people use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. That's really how I think of it.
But is Bitcoin, before we just touch on gold, is Bitcoin at the end of its bull cycle at 100K? I think that's what people want to know. Are we at the top?
Well, let's look for someone to blame. And picking tops is good way to lose your hair. But I think it's one thing I've learned in this business, certainly when you're on the sell side with a client and you get them in a decent trade and they ask you to take profits, you never say no. First of all, you got to get the trade and you want that money for the next trade. But also, it's essence, taking profits, the essence of business. To me, this is the most, I like to tilt it over to the whole space. You just look at Dogecoin. What is $60 billion of Dogecoin mean? The future is going to look back and it did in, I think, 1929. It's this silly, expensive, speculative excesses. Now, that's one of the 2 million or so crypto wannabes. Then there's Bitcoin, digital gold. The thing is, I just think it's like I mentioned, what's happening in the ETFs. I think it's pointed out it's reached somewhat parity on a risk-adjusted basis with gold ETFs, and they've been around 20 years. And this is a pretty significant level. But also, I keep to point out is it going to get better for Bitcoin than what happened this year? I mean, to me, this was the best it could have ever been. Yes, and maybe it continues to move up another 30-40%, but expecting the 2x next year, you have to firstly say, okay, well, the stock market's probably need to go up another 30%. And that might make sense. But what if the stock market's down 10%? Bitcoin will be down 30%, unless that relation shift. And that's what I want to end with. On a 100-day basis, the Bitcoin to S&P 500 correlation is about 0.50. It's the highest in its history.
Let me just take a look at the screen here. If you take a look at my screen, Bitcoin versus the NASDAQ. So Bitcoin's up about 166% 138% year to date. That was 1 year. And then the NASDAQ's up 35%. Over the course of the year, after the ETFs were launched, we had this massive inflow, and then it just traded range bound, as we know, we've been on the show several times, just this downward consolidating pattern. And then it wasn't until near the election, right, beginning of November, end of October, that it really started to sniff out Trump's win, and then it just kept going up. I wonder how much of this is just news-driven expectations of policy changes and has nothing to do with the fundamentals of stocks or risk appetite.
All the former. It's completely momentum, and we all know how that works out. It's in shorting it. That again, you can lose your hair. But prudent investors, I think, look at this and say, "Thank you. This is not a place and time and an asset to get overweight long." Now, okay, some of us got lucky in 2000 when I first pointed out overweight long run 10,000 is great, but now that you're at 100,000, it's probably a prudent place to be booking profits and looking back and waiting for some normalization. That's why I look at it as we have not had a 10% correction in the S&P 500 since fourth quarter of 2023. I predict we will have one. Again, you want to blame McGlone for something? He's predicting it again. It's silly, but it's my job to predict things like that. But it's silly not to have that. It's just the point you get to a certain point we've priced in absolute perfection. Yes, I get it. Trump's a new, but now we price in complete optimism for this new government. And I think the realism is, yes, that's probably going to be the case in a couple of 3 or 4 years. But the first thing is going to be pretty substantial tariffs, pretty substantial shakeup in jobs and government jobs, which means maybe we'll finally get the first 10% correction. Remember, that's nothing. Normal used to be 20% corrections. That's just how price for perfection we are in risk assets. And that's why I put Bitcoin in the stock market in the same space. It's just Bitcoin's now more of the global leader and certainly on a 24/7 traded basis.
I'm thinking, Mike, almost everyone I've talked to in the last 2 weeks has said to book some profits at around the 100K mark. And I know it's psychological. And I know that's what people are doing right now because it hasn't broken above 100K and sustained about the level. Isn't the contrarian play, because the theme, I guess, this time around is contrarianism, isn't the contrarian play to do the exact opposite of that? Start buying, accumulating at maybe 99,000 and expect it to go higher.
Or traders, sure. And exactly. I love when you play devil's advocate. That's why I love talking to you. That's what you're supposed to do. So I'm used to my whole life with clients, and you're supposed to. The thing is, you can do that, and I think I'm more of a leveraged trader basis.
Yeah.
But your average person that I didn't, back 4 or 5 years ago, I got the questions and it was kind of hard to buy it. Now I get it all the time and it's kind of scary. Everybody can just push a button and buy IBIT or even GBTC, whatever, and buy ETFs. It's just at the point, sure, for a trader standpoint. And that's the thing we're at. It's silly stage, David. It can get really stupid expensive, and markets oftentimes do. You got to stop out look what happened. It's Microsoft. MicroStrategy. I think is really stupid, silly expensive because we're squeezing some of them shorts. But market's supposed to do that. And remember what Soros says: find a bubble and join it. But I look at it from a macro standpoint and give it at least a year or something. I'm just looking forward to next year. Bitcoin is still not even. It's not past the test, and we've had plenty of tests. And if you haven't had a test, one this year, just give me a 10% correction in beta S&P 500, and typically it drops a third. Now that's something I'm looking for to help test my outright views. Maybe if it does that and Bitcoin drops less, I can reassess my view. But the fact you said that about profit taking, yeah, that makes sense. It's good we've got to this level, but there is is it going to get better than what happened this year? Those 4 horsemen, the things that happened this year with Donald Trump switching is that's like I looked at it as it's like a bargain with the devil for Bitcoin people. And again, you get your Shiba Inu to $60 billion. Doesn't say it can't get to 100 billion. But these things always end up going back down much more than you expect when they do go down. It's a question of when.
Okay, so 2025 recession. Let's just, for the sake of argument, assume it happens this year. What does that mean for Bitcoin? What does that mean for gold? Now, Jerome Powell, we can insert a clip of Powell saying this. He said that Bitcoin is now a competitor to gold, not the U.S. dollar. First of all, do you agree with that? And if so,
of course. Yeah, well, you and I both know I wrote about that half a decade ago.
You're writing about it now still.
Well, actually, I write about it less now because, it's finally in the mainstream. That's the thing, and you always try to look way ahead. And I have no value if I just tell you what everybody else says. I have to point out, be ahead. I mean, that's a strategist. I mean, I'm just telling you what the news is and can get that. So agreed. Thank you very much. It's the things kept writing about when Mr. Trump pushed back on it, and certainly the Biden administration pushed back. I'm like, what are you missing about this technology that adopted the dollar as its base layer? And I still like to repeat, the number one in trade crypto is not Bitcoin. It's the dollar via the Tether token. That technology is overwhelming. Remember, that's from a person who came from futures that took a lot of business from a lot of other markets because it's just a better way to transact and mitigate risk and things. So going forward now, it's about how much better is it going to get? So I'm just, the key thing is you mentioned that word recession. Here's the problem. We're at that point now is the number one force, I think, for recession, other than the normal thing that used to happen is when unemployment goes up and things like that, is stock market. It's only been 100 years that here's an example. If we have a 10% correction in the stock market, that is $6 trillion. That's 2 times GDP. Put that in context. If our trade deficit is running around $1 trillion, if we have 20% tariffs and all that, that's maybe $200 billion. That's a rounding error compared to just a normal stock market correction. So we are in a 1929 type scenario, but maybe it's 1927, maybe it's 1928. It's where we are. Maybe it gets better, but we're at that point where, and even credit spreads are so tight, they can only go up. Now, even my colleague Gina Martin Adams pointed that out. But these things can last a long time. I'm not saying get short, but you just find alternatives.
Maybe tariffs would be a trigger for some sort of slowdown, recession, even depression. I mean, that's what happened in 1929. Smoot-Hawley kicked in.
Exactly. Yeah. So I think that's a key. It could be. I think what's going to happen is, having read that book, No Trade is Free by Robert Lighthizer, we should expect pretty significant tariffs across the board right away, and then negotiation. Because that's one thing you point out in the book. The U.S. is just, and this is something I remember it was great to read that book. It brought back things I spoke with clients decades ago. I remember being in the trading pits. We always used to say, everybody in the world wants free trade as long as they can run a surplus with the U.S. Because recently there was a program, Wall Street Week, on Bloomberg, where one of the analysts pointed out that, Norway did this and did that. I'm like, it's silly to still make those econometric comparisons. No one from another planet comes down to the earth and says, I want to sell something to Norway. There's a 10 on the global scale to sell anything. It's the U.S. And I asked our clients, what country is even a 3? maybe Germany, maybe the UK, on a 1 to 10 basis to sell anything. It's the U.S. and it's a global reserve currency and it provides security. So there has to be something that U.S. should say, well, okay, you want to sell something in our country, you should pay a higher tariff than we pay in yours, partly because your market's nowhere near ours. And that's what's going to happen. And that's going to be discombobulation in the short term. It means profits in the short term. And that's what I'm thinking. Maybe we first get that little bit of a backup in the stock market, and then we can kind of reassess all these things. But right now, towards the end of the year, having even started the first Trump administration, it's nothing but upside, and that's when you're supposed to be prudent, saying thank you. Let the silliness prevail.
So just ride the wave for now until more indicates. Well, let's talk about some things that may move markets in the opposite direction. Scott Bessent, he has 333 policy. One of the threes is 3% deficit to GDP. You brought up the magic number, which is 6.97%. That's what we're running at right now. If we move towards 3% deficit to GDP, what does that mean for markets? Is that inflationary or deflationary?
Well, it's how they do it. I mean, first of all, it's
well, we know they're not going to do it through tax increases. They want to do the opposite of tax.
Pretty significantly, seriously deflationary. When we spend more than you earn, you're inflating. We're inflating assets. And to me, that's why it trickles down. The number one force for deflation in this country is a backup in the highest stock market valuation to GDP in 100 years. If people disagree with me, well, let's just test it. Let's see. We haven't yet. But that is where I think if you're this new government, say, let's rip the Band-Aid off right away, get this over with. Because you want to get through midterms. You got 2 years for that. Tariffs will happen right away. The job may be purging, and however he does with the government. I was just thinking recently about the U.S. Post Office, hearing talk about that, maybe a little purging of some of those excesses there. That means 2025, I think, is finally going to have a little bit of a backup. Maybe we get 20% in the stock market. God help us. I mean, but used to happen. But 10%, it used to be normal. And that's why I'm looking for leading in the case for that to happen. But we should expect this to happen soon rather than later. So let's say if they wait till later and it happens in 2026, so as we get towards midterms, that ain't good. You want to do it right away.
Which commodities are probably the best or most consistent in predicting economic growth or slowdowns?
Copper. Nothing but copper. So it used to be crude oil, but crude oil is oversupplied. It's being replaced by technology. Every day that goes by, we see demand estimate revisions heading lower. For crude oil, we said supply estimate revisions heading higher. I think crude oil is going into 40. The significance is everything is about copper. So copper needs to sustain above this $9,000 a ton level, or maybe above $450 a pound, because if it doesn't, it signifies it's following what's happening in crude oil by going down. It's following what's happening in grains, which again are going down because of the normal elasticity that happened because of the big pump in prices and Russia's invasion of Ukraine. And again, you can't mention copper without the same sentence saying China and then mention over China bond yields, 1.84%. So here's my outlook for copper. I'm going to put it into dollar terms because we're North Americans. Copper made a new high this around 5.5. Right now it's trading around 4 and change, 425. I think it's more likely to go to 3. And do what it has been for basically the last 15 years. It peaks up, it gets to near 5 or so, and then it drops to near 3. Then go back above 5. And to me, that's your deflationary force. The key force for that could be Bitcoin going down. For copper to stay up, number one, you need the U.S. stock market to stay strong. You need U.S. bond yields probably to stay high. And you need China probably to recover and come out of this pretty well. And then their supply is usually pretty good. It's somewhat short-term might have issues. All those things are, to me, the dependencies are great. So I think copper's the number one to watch. I think it's more likely to go lower, which is a pressure factor for silver and crude oil and all commodities. And there's that inordinate burden and dependency. Copper has to go up because the stock market has to go up. And what's the best leading indicator? Bitcoin. They're all linked now. That's part of the problem when you get this expensive. So in terms of commodities, it's what everybody really got bullish too much. And here's what really bothered me about last year. That high at 550 in copper was a new high. Never won the big picture. Let's look at the big picture. Copper did make a new high this year. It did make a new high in 2022, and crude oil didn't. Big picture, sure. Copper should continue to outperform crude oil. But it was on the back of pretty significant speculative excesses in futures. I mean, managed money net positions got to almost 1/3 of net long of total open interest. That was pretty long. Typically, a normal copper, I would say, balance in management net positions around 10%, and usually can get down to 15% net short. So I'm worried about that reversion. It's one I'm watching the closest in terms of commodities. It's one commodity that has to go up if you want to build into the bit of the global reflation story. But then what's going to happen? we're going to get tariffs. Are they going to be just as Trump just, warning us, or are they going to come? And I fully expect this war with China is going to heat up. So here's one thing that could change everything. Mr. Z picks up the phone, calls Mr. Putin, says, this unlimited friendship, we're done. It's not working. I'm going to tilt back over. Do you know that best customer of mine, United States, that I chose to make as an enemy? I'm going to be their friend again because we need to sell stuff to them. And they kind of were just liked us, but now they realize we don't like them. Or actually, not we, me, one person. It's one person. It's shocking how it's come down to one person. But that's what happens with autocratic, communist-led regimes. This is where we are right now.
So a reversal of relations between China and U.S.
Yes. Well, so exactly. So it's China rehashed significant Cold War inklings in the U.S. by tilting over towards Russia. And what did they do also? Out of that axis of antagonists, Iran and North Korea, both want nuclear weapons. And what's North Korea doing? Helping Russia in this war in Ukraine? And well, of course, Russia's falling behind what's happening in Syria. That's probably going to be about their path to get nuclear weapons. So this path towards global Cold War is getting hotter every day. Can Trump change that? There's a lot of optimism he will. That's the problem. We just need to go back to, I think, markets price for perfection when the world isn't perfect anymore. And but again, it's one person in China really driving this, and that's Mr. Z.
Couple more things before we close off. So on that note, geopolitically, gold, I wonder how much of this drop in gold was due to the fact that the markets are expecting, like you said, Trump to kind of resolve the war in Ukraine, resolve the war in the Middle East, although Syria just, when one country's dying down in terms of escalations, another one's heating up. Now we have Syria's government being toppled. Anyway, gold's pattern of dropping and then going back up, recovering some of its losses since the Trump win. What is that signaling?
Gold is in a pretty significant bull market and made a new high. And what you see in that chart is something that really helps bull markets. It's had about a 10% correction. Now, we haven't had that in the S&P 500 a long time. That's typically what it needs is a shakeup. What's happening in the deepest pockets on the planet are buying gold, starting with China, central banks. Kind of don't want to, you want to go with that trade. Now, for them to sell significant détente, switch over to the dollar, maybe, is that going to happen? Very unlikely. So bottom line for gold, I fully expect it to go higher. I am anticipating what I'm bit fearful about. It seems like it's major consensus versus this time last year, but I have to go with what I think. I think it's going to continue performing out most commodities, particularly crude oil. But first of all, let's look at the risks. Again, the same. The number one risk I think for gold is if we have the continuation of higher interest rates in the U.S., stock market going up, and at the same time, Mr. Z calling up Mr. Putin saying, "Sorry, I'm done with this. I want to be a friend with U.S., not you anymore." Mr. Z calling Mr. Putin. Now that's unlikely. I think the best thing for gold is to keep doing what it's doing, but a potential reversal in ETF outflows. Again, this is the fourth year in a row of investors in U.S. saying, "Sorry, I can buy the Qs, or I can buy T-bills. Why do I want GLD?" At some point, that's going to flip. I didn't say if, it's going to. And that, to me, is what really gets gold going. And that's where I think everything is dependent on U.S. stock market staying up. What's a good best indicator for that is Bitcoin. So here's why I tilt over to gold is we've had significant inflows into Bitcoin and outflows in gold. What might flip that a little bit is just people give up a little bit. Maybe Bitcoin's reaches threshold around $100,000. And if that goes down and signals all other risk assets are going down, what's the number one asset, I think, and number one or two to do well? Is that would signal deflation? Gold and treasury bonds. So I'm afraid, I hope not. I'm afraid by the end of next year, they might be some of the best performers. Just on some normal reversion. Just say, let's say we buy this time next year and the stock market drop 10%. Whoa, that's not in anybody's outlook. And what would it mean? Well, it just got too expensive. 1987. Was the stock market ended up 2%. It was a nothing year, unless you dig into you were long on October 16. But so to me, that's the outlook. But the fundamentals for gold are still central banks are buying. It's very cheap versus the S&P 500. It's most expensive versus other things, but S&P 500, that S&P 500 to gold ratio is just like 2.3 or something. Historically, it's around 1, so that could narrow a little bit. And it's all based on the U.S. stock market. It has to keep going up. So here's what I like to end with. On a 1-year basis, right now we're December 11th, gold's up 32%. Total return for S&P 500 is 29%. That's not good. This AI-driven, wonderful banner year for the stock market's being beaten by the rock. So I view that as disconcerting. Now I'm sticking with the rock.
What is the trigger for $3,000 gold?
No, nothing. Just this momentum. It's none of the same. The trigger is nothing has to change. I mean, if gold can do this well in this kind of environment for the U.S. stock market, the trigger for 4,000 gold would be 10% decline in S&P 500 stays down, which means U.S. bond yields, which are on 4, go to 3, heads toward where they're in China, and continuation of which is central banks still is continuing to accumulate. That to me gets us to 4,000. That's not a lot to ask. It's very simple. What gets gold down or maybe pressures it is, again, that key flip in Mr. Z to just hop on an airplane, jump over to say Mr. Trump, this Putin guy, he's a nut. We're sorry. Let's do some business. And by the way, we'll try to buy some of your goods too.
Okay, let's end on silver then. So you mentioned copper going down to $3 a pound. What happens then to silver? So gold we talked about is silver's been following copper pretty much all year round. I don't know which was following the other, but relationship. So what happens to copper? Oh, sorry, what happens to silver if copper goes down to 3?
Down. So let's look at the problem with silver is it's been a good yield for silver unless you consider it with its beta, which is gold. Silver's up about a third, gold's up about a third. That's a bad year for silver. When gold's up a third, silver should be up 50%. Historically, it trades about 1.6%, almost 2 times the volatility. It's leveraged gold. And then, so I think silver, stuck between 30 and 40 forever. But the problem, I think, is it's more likely to still trade closer in this environment. With copper going down, it's going to have a pressure. I think the key thing to remember about silver is that gold to silver ratio, about 85, should continue to rise. The thing is, it's been stuck in a very narrow range, just like crude oil's been stuck in a very narrow range. The gold S&P 500 to gold ratio is stuck in these very narrow compressed ranges. They're just waiting to break out. And what's the catalyst for that? The U.S. stock market going down. I mean, that's the key thing that can get gold silver ratio continue higher, but it's been going up over time. I think it's more likely to rise. And one thing about gold silver, it almost always rises when U.S. unemployment rises, when the Fed's cutting, when the U.S. curve disinverts, which it is, and volatility in the stock market picks up, which is historically very low. I mean, that's one big problem. This is very similar to 2007. It's when the S&P 500 volatility reached almost a record low. We're pretty near that now.
Mike, great update. Thanks for your analysis. Well, all year round, basically, we want to thank you for your time and your education, but especially near the end of the year. I know you're busy. Where can we learn more from you and watch or listen to you and read your work?
Well, I don't want to wear out my line. I do love on your show. Just love being on your show. That's a good place. I'm on definitely the Bloomberg Terminal, but I post things on Twitter and at Mike McGlone 11, and certainly LinkedIn, Mike McGlone at Bloomberg. And if reach out if you want to be on my list, just ask. I'm happy to add you in my distribution list, which I publish about almost every day.
Yeah, I get it in my email. Great updates. So put the links down below. Make sure to follow Mike down there. Happy holiday season. Merry Christmas to you and your family, and we'll speak again next year.
Same to you, David. I'm curious. I'm looking forward to our next conversation.
That absolutely. Plenty of volatility to talk about in the new year. So stay tuned, everyone. Thank you for watching. Don't forget to like and subscribe.